Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.
This is Scalping Crypto. My name is Arun Singh and this is the platform that I have to get on. But imagine I was walking in with my eyes shut and no, I'm not doing it. Don't be upset, guys, or don't worry. So for example, if I have to get on with my eyes shut, I find it difficult, right? Because every time you walk into a new place, you have to have a strategy. You have to know which steps are you going to take, and it's equally important when you enter the crypto world, you have a strategy by your side. We'll be discussing some crypto trading strategies today, but before that, big stories of the week. Government has said that it has no plans to apply any regulations on Metaverse or Web 3.0 as these technologies are still evolving. This was informed by Minister of State for Finance Pankaj Chaudhary in Parliament in response to a question on them. Now, Finance Ministry sources have said that they are aware of the emerging new technologies as well as rapid proliferation of technologies like artificial intelligence, blockchain, drone, augmented reality, Metaverse and Web 3.0. They further added that national strategies has already been formulated by the government on artificial intelligence and blockchain. Also, the Information Technology Act 2000 covers the technology sphere in the country and therefore government does not intend to regulate such evolving sectors. Moving ahead, continuing the metaverse factor in our next story, Telugu actor Rana Daggubati is foraying into a venture which is called Icons, and this is a metaverse startup. Now, it's a firm that aims to assist musicians, celebrities and collectible owners in managing their assets. It was co-founded in August 2021 by Indian-American entrepreneur Abhinav Verma and Rana Daggubati. Moving ahead, the National Payments Corporations of India, that's NPCI. It's an organization for all retail payments and settlement systems in India. They said it's not aware of any cryptocurrency exchange using UPIs for transactions. They tweeted, with reference to some recent media reports around the purchase of cryptocurrencies using UPI, National Payments Corporation of India would like to clarify that we are not aware of any crypto exchange using UPI, and there you have that tweet as well. Moving to our next story, in Forbes' list of billionaires, there are 7 more crypto billionaires in the world as compared to last year. The Forbes crypto billionaires list has expanded by 58%, featuring a total of 19 individuals, and I would love to know their strategy. Probably the multiple strategies that we are going to discuss, probably they use one of those. But we will be exploring few popular ones for you, and we'll be explaining, and then we'll take it to discussion with our guests. For that, we'll go to our coffee wall. So, popular crypto trading strategies. We'll begin with dollar cost averaging. Now, dollar cost averaging is also called constant dollar plan. Let's start this with an example. I and you start investing in Bitcoin. You buy $5,000 of Bitcoin all in one go today. You get around 0.115 Bitcoin probably. I spend the same amount, which is $5,000, averaging it over a period of few months, protecting myself against Bitcoin's volatility and using it to my favor. And my dear friend, I might end up owning more Bitcoin than you. So in this case, I'll be using dollar cost averaging. You divide up the total amount to be invested across a certain period, this to reduce the volatility of the market. The purchases occur regardless of the asset's price and at regular intervals. It's more or less like SIP, systematic investment plan. Investing one lump sum amount can be poorly timed with regard to asset pricing. Although, one important point to note here is that it works out favorably only if the asset rises in value over the period of time in question. Moving on to our next popular strategy, which is arbitrage. We've discussed this in our previous episodes as well. We'll just try to explain this again here. A strategy under which a trader buys crypto in one market and sells it in another. The difference between the buy and sell price is their profit or loss, which is known as spread. Now, owing to the difference in liquidity and trading volume, traders can find an opportunity to book profit. One quick hack for this is that you must open accounts on exchanges that have a large difference between the prices of the crypto that you are trading with. Next one, we have scalping. This involves using increased trading volumes to book profit. Although there is risk involved, a smart trader takes care of the margin requirement and other important rules to avoid any bad trading experiences. Scalpers, as they're called, analyze the crypto asset, past trends, volumes, and choose an entry and exit point within a day. Moving on to our last popular trading strategy that we're covering in this episode, it's called risk bucketing. Now, bucketing is basically portfolio diversification. You bucket different assets to achieve your financial goals in conjunction with tolerance for risk. But please don't confuse it with an unethical practice in stock market, which is also called bucketing, wherein a broker generates a profit by misleading their client about the execution of a particular trade. So what happens is the broker confirms that a requested trade has taken place without actually executing that order, and that's where their profit or loss lies. And it's also called dabba trading in India, and it's an unethical practice, so don't confuse it with that. Now we just take it to our guest to discuss this further. We have with us Ajit Khurana, crypto evangelist and expert, founder Genesis Network, Rohas Nagpal, chief blockchain architect, Hi-Fi Blockchain. A very warm welcome to both of you. We'll begin with you, Mr. Khurana. What is your pick out of these four that we've discussed?
I will not talk about scalping because with the incidence of TDS, it may have become an impossibility. Arbitrage is fabulous in principle, but can be done very rarely and with small volumes. There is not a great opportunity available. It continues to be a very exciting one, but does not offer very large scale possibilities. I love averaging, dollar cost averaging or SIP or whatever name, because I don't know how to time the market. So this is the best way of doing it. Risk bucketing, while you rightly said it is like portfolio, it is like, you put so much money in FD, so much money in mutual funds, so much money in stock, so much money in crypto. But within each of these, you should say, I put so many in the large caps like Bitcoin, Ethereum, etc., and so many in small ones. So the two that I will swear by and never give up are the averaging, such as dollar cost averaging, as well as risk bucketing.
Okay, Rohas, your picks.
So I'm actually a blockchain developer and not really a trader or investor. So I go with the with the cryptos that I build on. So when I see a lot of clients coming to me to develop projects, I have to buy the underlying crypto because that is like my stock in trade. Every day I have to spend in that crypto because I'm building projects. And that's primarily today Ethereum and Binance Smart Chain. So I go with that approach. What am I building on? Let me only buy those cryptos.
Sure, you'll see the project and you see the model rather than the trading strategy of it. But Mr. Khurana, since you gave us quite an insight into all these, which strategy would you recommend to a beginner? Because a lot of beginners watch this show, and also since this market is opening up in India, which one strategy would you recommend to a beginner, Mr. Khurana?
I think that if you're an investor, which means you intend to buy and hold for at least some time, such as months, it is impossible to avoid the dollar cost averaging strategy. You absolutely positively must do it. I would very strongly advise against not using this strategy. Risk bucketing, desirable, but dollar cost averaging, absolutely necessary.
Okay, and I know, Rohas, you've clarified that you're not a trader, but would you recommend any of these to a beginner? Because you've, I think, for multiple times, you've actually talked about arbitrage on this very show as well. And
exactly.
we've explained that to our viewers in the past. But would you recommend any one of these to a beginner?
As you correctly said, I would recommend arbitrage because that is one of the best ways to make money, because you are exploiting the inefficiency in the market. That every crypto in every exchange is not priced at the exact same amount. But I would like to say that you have to be very careful, because if you find an arbitrage opportunity in a low liquidity crypto, you may actually get stuck. You can only make money in arbitrage if you are going to buy and sell virtually in real time. So if you get stuck with a low liquidity crypto, you're stuck. Like if you remember, when there was a crypto ban rumor a few months ago, and suddenly there was a huge dip in the price of USDT versus INR, whereas the US dollar to INR was same. So a lot of people made huge money in that particular arbitrage. So wait for opportunities, and I would say arbitrage is the best way.
Where they bought crypto here and they sold at foreign exchanges.
That's correct. That's correct.
Right. Yeah, that's when I think we discuss arbitrage here as well. But Mr. Khurana, these are great, probably strategies on paper, but these can backfire if not done properly. So are there any tips that you would like to arm our viewers with?
Yes. So I will actually stick to just one of these because the discussion will become very long otherwise. The logic behind dollar cost averaging is that if you invest equal amounts of time over separate equal periods of time, what tends to happen is that when the price goes down, you buy more number of units. When the price goes up, you buy fewer number of units. So you get a better than average price. The average of 4 and 6 is 5, but you will get a better average than this. What tends to happen is that while this is a tool to remove emotions from the system, when the market is falling, people will shut down their dollar cost averaging, which means they'll stop their SIP like in the mutual fund. And what happens is that the lowest priced ones where they were going to get the most number of units, they've shut down because now they are panicking. And as a result, this will backfire because that means they will only buy when the market is high, which defeats the entire purpose of averaging.
Right. And of course, we're talking about traders here, but let's say I'm a beginner. I don't even get these strategies. Rohas, this question is for you. I don't get these strategies, let's say. What are the other tips that you would like to give this kind of audience who probably has not researched about these strategies or who doesn't get it, but there must be some tips for them before they go out to trade or invest?
Sure. I would say if you're absolutely new, then just look at one thing, which is called the Bitcoin Fear and Greed Index. So every day the index shows you whether the market right now is in fear or in greed. And it's a scale from 0 to 100. And without doubt, I can tell you, when it shows the market in extreme greed, that is the time to sell. When it shows extreme fear, that is the time to buy. Because when everyone is scared, everyone sells is when you get it at the cheapest price. And when everybody is greedy and saying it's going to go up, that's when you sell. And this applies primarily to Bitcoin. So I would say if you're very new and you are just starting with crypto, stick to only one, which is Bitcoin, and just use the fear and greed index as your guiding light. And I think you could do pretty well.
Sure. Thank you so very much, both of you, for talking to us on this. And now moving on to our next segment, which is MCQ, My Crypto Queries, where we take your queries to our guests. And today we have Sharat Chandra, VP Research and Strategy, Earth ID. It's a global decentralized self-sovereign identity management platform. Mr. Chandra, very warm welcome. And we will begin with Abhishek Bhonsle's query, which says how to find cryptos that will blow up. Now, this is a question which is on top of several investors' mind, that, you know, how do you identify that one crypto who's probably not doing great at the moment, but it will blow up in the future? And that's how you can really play with the market. But how do you identify that this crypto will blow up?
Right. So I think the best way to start is look at the crypto launch pads, right? For example, there are multiple launch pads for even NFTs. So that will also help you discover the right projects, move in early. The second step would be to look at the white paper, look at the tokenomics, understand which is the team which is building it, right? And look at the yields. What is the yield APY they are offering or promising? It's also important to look at the liquidity which they're offering. Is there a liquidity lock or not? And if there's no liquidity lock, that's a warning sign, I would say, right? So look for these signs and look for also the utility of the project, right? What is the basic premise of the project, what it intends to do, right? What is the roadmap, the product roadmap? And most importantly, the team, right? Do you trust the team, what they're building, and all that aspect needs to be factored in.
Probably you're getting a lot of queries there in your office as well. Someone is calling you up for you to solve that query. But I also wanted to ask you, like, it's again question related to this query only. You know, a lot of people consider who all are promoting it. Of course, you said the team is important, whose backing is important. But when it comes to social media buzz, who's supporting it, who's talking about it, also matters a lot. Would you take that as a big factor?
I would say let's take that with a pinch of salt, because in one of the episodes you also talked about the influencers, right, and the scams it can also bring. So most of the times, even people who are promoting, they might not know much about the project, right? So it's always better to even take the advice with a lot of pinch of salt. Do your own research, look at the team. In fact, engage more with the community. Let's say if a project is built on, let's say, Avalanche or Solana, right? Engage with the community, right, at large, and discuss about the project. I think that's one of the best ways to take it forward.
Sure. Moving on to our next query, which is what is the future of Solana? And I would like you to introduce Solana first and then, of course, talk about its future.
Yeah, so Solana is a new age L1 layer 1 protocol which promises scalability, and it also is one of the most energy efficient protocols. Now, when it comes to Solana, the future I think is bright because Solana NFT ecosystem is growing. In one of the reports released by JP Morgan in January this year, they said that Ethereum is losing its market dominance to Solana. So Ethereum had close to 95% of NFT market share. Now it has come down to Solana. Now, the second aspect is even the VCs, the venture capital firms, are also investing big time on Solana-based marketplaces. There was one announcement made by A16Z, one of the leading venture capital firms, where they have backed a crypto gaming platform which is hosting Solana-based NFTs. Right? So I would say that is another indication how this ecosystem is evolving, the Solana ecosystem is evolving, because VCs are also betting on it big time.
Right. Atul Anand asks, is mining still profitable after the new tax rules?
So the new tax rule says that the infrastructure cost or the crypto mining cost cannot qualify as a tax deduction, right? So given that information, right, it's not profitable, it's not advisable to do crypto mining because you will not be able to offset those costs with respect to equipment costs, electricity costs, right? You will not be able to claim any benefit out of it.
Right. So, of course, it doesn't come under cost of acquisition, and that's why you can't really avail the deduction. And while we were talking about Solana, of course, it's extremely energy efficient is what they claim, because, you know, when cryptocurrency picked up, the biggest criticism that it faced was the environment concerns. And I was just searching about it, and Solana's website says an average Solana transaction uses 2,707 joules or less energy than 3 Google searches. So that's quite a tall claim and quite an achievement also at the same time.
Right.
Well, thank you so very much, Mr. Chandra, for joining us for this conversation and segment. And now we're taking a quick break, but we'll be discussing meme coins, the buzz around it, and where are they headed at. All of that after the break. Keep watching Scalping Crypto. Welcome, you're watching Coffee and Crypto. Meme coins aren't funny anymore because they're getting serious. The business is getting serious, but where are they headed? Are they even headed anywhere is what we'll find out in our discussion. You're watching Coffee and Crypto. I'm Arun Singh, and we'll begin with talking about buzz around meme coins. Meme coins essentially started as joke, and Shiba Inu and Dogecoin are two popular ones, and we have some special stories related to these two. Let's begin with Shiba Inu. It's a meme coin project that mimicked Dogecoin. It announced its metaverse, which is called SHIB the Metaverse. More than 100,000 plots of land will be up for sale there. The team also announced the prices of the plots, which depend on their location, detailing they'll be sold for Ether instead of the Metaverse's native coin. On the other hand, recently, Tesla chief Elon Musk bought a 9.2% stake in Twitter, valued at $3 billion, making him the largest shareholder in the social networking company. And you're wondering, why is that info on Crypto Show? I mean, what has it got to do with Dogecoin? But well, this led to Dogecoin seeing a growth of around 10%. Many believe Elon's move has a direct link with it. Why, you ask? Well, a few months ago, Tesla announced that it would accept Doge as a payment for select merchandise, skyrocketing its value by 11%. Musk's first Dogecoin-related tweet occurred on December 2020 when he wrote one word, Doge. And shortly after, the value of Dogecoin rose by 20%. That's the world of meme coins for you. But since there is a lot of buzz around it, where are they headed? What started as a joke is now getting serious. So are these meme coins even headed anywhere is what we'll find out with Rohas Nagpal, Chief Blockchain Architect, Hi-Fi Blockchain. Welcome again, Rohas. So we've discussed meme coins a couple of times in the past, and you've criticized them a lot. But now they're getting a bit serious. I mean, they're getting into metaverse, and then Dogecoin is also seeing a surge. First, quick reaction from you, like, what do you think of these now?
Sure. So I'm a big fan of Dogecoin actually, and I don't think we should call it a meme coin anymore. It may have started as a meme coin because it is based on a popular meme, But the technology has really grown. People like Vitalik of Ethereum and Elon Musk are actually helping the technology also improve. And I believe, considering the supply that it has, maybe Dogecoin could become a very good medium of exchange in the future. And when it comes to Shiba Inu, I'm not a fan of it at all.
But when you talk about,
I think Doge will do well.
Okay, but what about Doge is very promising for you?
The technology.
I mean, what part of technology is it that you're finding attractive?
So one is, of course, its consensus mechanism. The energy consumption is not very high. The security aspects have been taken care of very well, so that you don't really hear of much attacks happening on it. The circulating supply is quite high, so that means it's not like Bitcoin, which is super expensive and limited in quantity. There's a lot of Doge, and if a large number of organizations start accepting it for payments, which is already happening. Today, there are thousands of organizations accepting Doge for payments. So I think we should start to look at Doge seriously as a medium of exchange.
Okay, any other meme coin that you think is doing nice? For example, Shiba Inu you didn't like, but is there any other meme coin that you're seeing doing great job?
Not really. I think Doge is the only one doing pretty well.
But where are these headed? Don't you think it's a nice strategy for these meme coin creators to begin as a meme coin and then probably, catch up the buzz and then get on to the serious path of it?
Sure, but I think that hype cycle is over. So meme coins had a good hype run last year, but now people have kind of gotten bored and moved on to more catchy buzzwords like NFTs and metaverse and all that. So today it may not be a good strategy to start as a meme coin, but if you start off today a new crypto, I would say rather than meme, start with something in the NFT space or something which has more buzz right now. The buzz is a temporary phase.
But I see a lot of coins emerging with the similar name as Dogecoin. They are, with minor modifications. They look similar. Their logo is almost same. Do you think that kind of create a confusion?
Yes, it does. You're quite right, actually. So for newcomers, it becomes a little complicated if the coin looks the same or the symbol is also very similar. So which is why they have to be extra careful and look and make sure that the logo is identical and the symbol is also very clear. So yes, you are right. It does confuse a lot of people.
Because I got an article from a friend which was an apparently Dogecoin article, but it turned out it was some other coin, and that friend was like, see, this is what I was telling you. And then I was like, no, it's some other coin. So I'm sure a lot of beginners are actually finding it confusing. So in the end, you would say not all meme coins, but at least Dogecoin has a better future or a stable future.
Yeah, I think so. Because I can see it having good use cases.
And we stop calling it a meme coin then?
Yeah, ideally we should now stop calling it a meme coin because that reduces the value. People don't take it seriously. I think it's time we consider Doge a medium of exchange on par with a Bitcoin Cash or a Litecoin.
Sure. Thank you so very much, Rohas. That's all the time we had for this show. This was Meme Coins discussion. We'll be back with another episode next week on Friday at 6:30 p.m. only on NDTV 24/7. Keep watching.
Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.